Welcome into a daily editorial here on the KE Report. In this daily editorial, I am joined by Jordan Royburn. He is the founder and editor of The Daily Gold. Jordan, since we are in the final day of January, let's look at where we're going to close on a monthly basis for gold, GDX, and silver. First and foremost, let's talk about gold. Gold is looking like it will close at the highest level on a monthly basis since July of 2016. And that's pretty much when gold topped out during that run in 2016. Again, it's not a breakout above that level, but one thing is for sure, and that is that it is at the higher part of this trading range. Still, I would argue a relatively boring and ignored sector. But what do you first and foremost take away from the close that it looks like we're going to get for gold?
Well, Corey, I would take away that the close is above 1330, which is something we talked about, if not last week, we talked about it the week before. And looking at the monthly chart, given where we've been trading, I mean, I'm looking at it right now at around 1328, 1330. That's where I see monthly resistance. And so it's good that we're able to close above that. You know, the highest level this month was, I think, a tiny bit higher than the September high. Not quite as high as what we had in 2016, but, you know, $10 or so below that. But all in all, closing above 1330, I mean, that's really a good sign. The next monthly resistance is around, or it's that 2016, those 2016 levels in July, August that I'm looking at around 1360. So that would really be the next step. I mean, I wouldn't be surprised if we corrected next month. That's not a prediction. I'm just saying I wouldn't be surprised. But nevertheless, closing above 1330, that's a good sign. You know, we're able to hold most of the gains this month in gold, even though the other components of the sector, they weren't able to hold their gains, and they're just not quite as strong as gold.
So, Jordan, what about GDX? Because, as you said, GDX there, it's not as strong as gold. It is still trading up in slightly a higher part of its range, but in terms of monthly close, we're still about 30%, let's say, off of the highs that were put in on a monthly basis in 2016. This just speaks to what we've been talking about, the stocks lagging. But is there a difference, or do you have a different outlook on in terms of the GDX monthly close?
Well, I mean, just looking at the month by itself, the candle is kind of an inverted hammer, which means that the market traded up for most of the month, but closed the month and failed to hold most of the gains. So gold itself has been able to hold those gains. Gold stocks, not as, I mean, I shouldn't say not as much, it's more than that. I mean, looking at GDX, it's only, right now, it's only up 1.38% for the month. So that's pretty weak considering it. Look, you know, we started the year with, it seemed like, gains every day. It was able to trade up nearly to 25. But it just, I mean, the fact that the miners are, you know, lagging over the last week or two, that would just tell me that the market is not ready to break out yet.
Now, when it comes to silver, I think we're seeing a lot of the same that we are seeing from GDX. I'm looking at the SLV chart, and to me, we're still a little ways off of, again, that high in 2016, a long way off of the peak back in 2011. But it's just been almost a flat sideways move. I guess you could call it a boring consolidation. What do you have to say?
Yeah, looking at silver right now, I mean, this doesn't update today, but silver coming into today was down 0.5% for the month, and the candlestick pattern of recent months looks quite a bit like GDX, and especially this month. I mean, for silver, we have an inverted hammer on the monthly chart. It traded up to the 20-month moving average, but was rejected there. But yeah, so silver, like the gold stocks, hasn't been able to hold on to its gains. And that, again, Corey, that would just tell me that gold is not ready to break out yet. I mean, if silver and the gold stocks were leading gold and they were showing more strength and they all had strong monthly closes, I would think, well, maybe gold can attempt to break out in the next month or two. But from the way things are looking here and now, I don't think we're going to see a breakout in the next month or two. But that being said, Corey, I don't want to get too pessimistic on silver and the gold stocks because I think at some point this year we are going to see that major breakout, and therefore you have to look at weakness as I won't say a buying opportunity, but you have to look at weakness as an accumulation opportunity. I mean, here and now, if this weakness continues and we continue to consolidate for a couple more months, I mean that's your chance to buy, to look around, find the juniors that you think can really outperform, and then you'll be able to buy them at reasonable prices. Because if you just wait for the market to break out and you wait for momentum, I mean, you'll be chasing these junior stocks 30, 40, 50% higher. So we should exercise some, contrarian discipline here if we don't break out in the next couple months.
And I guess that just kind of needs to be the strategy, that as long as we stay in this range, buy on the dips and accumulate a position, and then hope and wait for that breakout to come. Do you have any comments on what we've seen this week in terms of volatility in the U.S. equity markets not really carrying over at all to the gold or precious metals sector?
Not really. I mean, I have been of the thought that we really need to see a big correction in the S&P 500 for gold to break out. And I mean, that's very possible that will happen, but I don't know if this is, I know that the society that we're in and the culture, we're looking at things, every minute, every hour. And so looking at the S&P 500, it just looks down a little bit to me. I don't see any huge volatility, but that being said, I haven't looked at the VIX today. I mean, I guess that has spiked up in the last week, but that could be a precursor to a correction, perhaps. In the overall stock market. I mean, it's been running really hot for a really long time. I mean, it with respect to how many days the market has gone without a 5% correction, that is very close to an all-time record if it's not there. And then also you can look at there was probably not anymore, but coming into this week, I think there was a record for days without a 1 or 1.5% correction in the market. So the overall stock market has been running really hot for a really long time. It's overdue to have a correction, and I wouldn't be surprised if this is the start of a correction. But I've said that with every round of weakness in recent months. So we'll see what happens there. But I do think that we will get a correction at some point in the stock market this year, and that is probably going to be positive for the precious metal sector. I mean, who knows? Perhaps that happens later in the year, and that's when precious metals are able to break out. Or perhaps it happens in the spring, and that leads to a breakout in precious metals. So if we are starting to see the very, very early signs of a correction in the stock market, that would be a positive for precious metals. And the correction in the stock market, it doesn't mean that as soon as the stock market goes down, that's when precious metals are going to explode and break out. I mean, perhaps it could be when the market's down 7 or 8%, and before it bottoms, that's when you see precious metals really start to trade higher and break out. So even though a correction in the stock market is positive for precious metals, that doesn't necessarily mean that that negative correlation is going to be there like every hour, every single day. It's not like a perfect negative correlation if you're just looking day by day.
That's very true. And technically, timing-wise, if you look back on history, if the markets do sell off, the metals get hit initially. They're just the first ones to bounce back. So does that maybe also speak to the strategy of having at least still a little money off the table? I hate to say it because I feel like there's a lot of people with their money off the table that are watching this sector, but if you're expecting the bounce and the breakout to come in the metals thanks to a pullback in the U.S. markets, maybe it is a good strategy to have some money on the side. What would you say?
Well, I mean, I would think that having some cash now is a good idea, even just excluding our comments on the stock market, because what we said before is it looks like, looking at the monthly charts, it looks like precious metals are probably going to consolidate for a couple months. I don't. If the stock market were to have that kind of 7 or 10% correction, I don't know that it would. Precious metals would get hit that badly. They might get hit, a tiny bit, maybe not that much more than what we're seeing right now. So I'm not really worried about a correction in the stock market having a negative impact on precious metals. I'm just saying that, they may. It could be a thing where the stock market corrects, precious metals go sideways, and then when the stock market correction is in its later innings, that's when you see precious metals start to get bid, and then they start outperforming and breaking out, and then the stock market starts recovering. I mean, that's what you had in early 2016. But it's a good point that you made, Corey, because a lot of times with precious metals, if you look at history and how they perform compared to the stock market, as far as that correlation or relationship, when I've studied history, a lot of times I've noticed precious metals really perform best either during a bear market or like right after the bear market. So it's just something to keep in mind as this year moves on.
Okay. Hey, interesting comments, Jordan. We're moving to the end of the first month of 2018, and it's been really a noteworthy month for a number of markets, but as we just pointed out there, for gold, GDX, and silver, we didn't see a solid breakout. Although gold is very close, it is leading the way. It would be nice to see silver and some of the gold stocks pick up the pace. Who knows what we're going to see next month, but the monthly charts always are ones that I think are the most important for investors, especially those that are not day traders, to pay attention to. Have a great rest of your day, Jordan, and thank you again for the comments.